break to the show my next guest this morning, Dan Gramza, President, Gramza Capital Management. Good morning, Dan, and thank you so much for joining us.
It is my pleasure to be with you.
So, Dan, we certainly would like to know if a bull market can survive higher inflation and higher treasury yields.
Well, I think it can. I think the earnings situation in the United States is still positive. I do look for follow through to the upside. It's a little cool today so far. People are waiting to see what Powell says, but I don't see any reason to be too anxious about that. He's going to be, my feeling is he's going to be consistent. There's no reason for the central bank to change their policy. We're seeing some, I think, positive earnings results coming out. So the case is stronger for the stocks than it is negative longer term. So I'm still on the bullish side when it comes to our stock market. And as far as yields go, you asked me about yields. Could yields go higher? I think they can. And inflation, could we have inflation maybe towards the end of this year? Possibly so. Will the Fed tolerate that? If they're still going to stick to their 2% guideline, then I would say yes.
So considering everything that's going on markets, if we start with treasury yields, then we also inflation expectations. On the other hand, we do see a pause of the rally that we are used to see. This crazy bull market, let me call it like that. I was wondering, what would you like to hear from Powell today? Because certainly he's going to try to reassure investors somehow, as Christine Lagarde did yesterday.
I think that's a great question, and I guess I look for consistency. I look for Powell to say that the Fed is still going to be accommodative. I look for Powell to say they're going to continue their bond purchases and that their inflation target is still 2%. So I don't look for changes. I mean, when we think about it, Alex, what would be the justification that the Fed has at this point to change their policy? What do we see that looks different than it was the last time he spoke? And I have to tell you, I really don't see any justification for a change in their policy. Actually, personally, I don't see any justification for them to change anything, maybe until the end of this year. Certainly not at this point.
I was wondering if we are witnessing once again a market rotation, because if we take a look at yesterday's trading session, we do see the banks that closed higher. The KBE index closed 1.76% higher. Then on the other side, we had also the United States Oil Fund, which closed 403% above the flat line. And not only the S&P 500 ETF, oil and gas ETF, the XOP up about 307% during the yesterday's trading session, which is certainly a major shift once again from tech stock to energy and banks. So is this positive for markets in your opinion? How do you interpret this major shift?
Well, I think that market is looking for things that may be overvalued, and that could be some of the shift that we're seeing. You know, what's interesting about this, and that this is kind of related to where we started our conversation today, is the market overvalued? And possibly so. We are stretched out, but we're not seeing money coming out. We're seeing money being shifted between sectors, as you just pointed out. Is that going to be sustainable? I'm not so sure about that. And will money shift back? Is healthcare still something to take a look at? Are technology shares still something to participate in? Even though we're seeing a shift like we are right now, like you just pointed out, you know, on a personal level, and I still want a balanced portfolio. I want to be ready for whatever wants to move to be able to participate in it. So I'm not looking so much to weight my portfolio from the point of view of different sectors. I just want to be able to participate whatever decides to move.
Then on the other side, I just wanted to have a very quick check on the commodities because we also did see a major surge in commodities trading. The WTI is trading at $61 per barrel. The Brent 65.40, slightly lower today, but still great levels. Let me call them pre-pandemic levels, even better than that. And of course, not to forget to mention Dr. Copper, the gold, and all these commodities that are trading higher in the past few months. Take a look at the copper's performance, for example, higher by almost 8% in 1 week, 14.08% in 1 month, and 25.10% in the past 3 months. So how do you explain that? And how are you positioned in terms of commodities? First of all, starting with the copper, gold, and then, of course, crude oil.
Okay, let's start with copper. I am bullish on copper. Yes. Have we come off? Yes. Did we stretch out a bit? Yes, we did. So I think the market's catching up to the fundamentals. In my opinion, are fundamentals still strong for copper? I believe they are. If we look at what's happening globally, we're still in the midst of this pandemic. We're not out of the woods yet. So we're still struggling to get that sorted out. However, we are seeing cases dropping. And as the cases drop, as vaccine is now distributed and getting jabbed into people's arms, well, at that point, or shots, as we say in the States, but as we see that, I think it calms some of the fears. The demand, I believe, in our marketplace is there. It's still pent up. So copper is a good measure of that demand. And I think the demand we're seeing from China really hasn't cooled off. Have we backed off? Yes. Could we go back towards those highs? I believe we could. And when it comes to gold and silver, the precious metals, is it sustainable? Do they have an excuse to really take off to the upside? I'm not bearish on gold. We are seeing some buyers coming into this market, as you're showing us here. But is it sustainable? That's been the problem with gold and silver throughout this whole move for the last year, is its inability to sustain a movement. It gets started, but there's no paper behind it, as you would say on the floor of an exchange. We're looking for order flow, and I don't know how sustainable it is. Nothing telling us to be a seller either.
Let me just ask you very quickly a viewer question. Of course, a viewer of ours is asking, is it a good moment to enter the gold market?
It could be, but here's the thing about gold. If you and I were going to be a buyer, let's say of gold today, two things need to happen. First, we need to decide what would get us out in terms of risk. At what point on the trade that you put in today would you say this is not working? And we have to have that defined before we put the trade on. So let's say you and I want to put a trade on now. All right, I'd be agreeable to that, provided that we have defined risk. Now, the second part of this is, when does gold start to move? If I'm looking at gold now to be long gold, then by the end of this week, we need to see that positive close. We need to see it move beyond the ranges that we've seen here for the last few days. And if it doesn't give us that, then I'm looking for a sideways move. So I think we have to be cautious. If you're interested in the gold market, one, define your risk, and two, define your objective in terms of time as well as price.
Great. Dan, I'd like to move very quickly to the crude oil. Isn't it incredible what we saw of the crude oil in the past few months, let's say 2 months? It just got back so quickly to pre-pandemic level, even before we got this positive economic outlook that you were talking about, and of course the vaccine rollout, which haven't been so successful here in Europe, to be honest with you. But despite this fact, the WTI is at $61 per barrel, the Brent is at $65 per barrel. Huge spread between both of them, by the way. What's your take?
Well, I totally agree with you. It is surprising. I am amazed that we're above $60. I really didn't expect to see that. I thought we'd be more range bound below this level. I am skeptical of crude oil at these price levels because I think it may be somewhat overvalued. But in its favor, if we go back to the global, we are seeing an increase in demand. Demand is still down overall. There's still parts of our transportation system that's not engaged. If we look at the cruise industry, for example, they're not engaged at this point, and that's a large consumer of energy. But if you look at China, if you look at South Korea, if you look at India, those are consumers of US crude oil. And we're seeing that demand steady and a little bit higher. So I still think there's positive things out here for this marketplace. I am skeptical above $60 a barrel. At $60 a barrel, it has strong fundamental reverberations through the market. There's a number of shale players here in the United States that are going to be profitable at that area. We're getting closer to numbers that the Middle East is more comfortable with. So we may be arriving to a steady state. I just don't see us taking off. For us to go sideways here in a $5 or $6 range, I think that would be reasonable. If you look at $63 maybe to the upside to $58, $57 to the downside, that type of range. But my expectation is more sideways here than it is a strong move up or down.
All right, Dan, I cannot skip to ask you about a Bitcoin. Why? Because it has a huge, a wide, a broad definition as a commodity, as a currency, and of course as a fraud. We've heard many things regarding the Bitcoin currently trading at $48,936. By the way, yesterday, Janet Yellen called off the Bitcoin. It's an extremely inefficient way of conducting transactions, and the amount of energy that's consumed in processing those transactions is staggering. This is what Janet Yellen said. On the other side, we have Elon Musk, who is totally supporting the Bitcoin. He also got great returns after this $1.5 billion investment in Bitcoin. So which part do you take, Janet Yellen's or Elon Musk?
I leaned, it's a great question, I have to tell you. I lean towards Janet Yellen because I think that's the reality of what we're seeing. However, we need to look at how the market's absorbing information. And what is that $1.5 billion infusion that we see from Elon Musk? What does that mean? And I mean, for him, you're right. He got a pretty good return on that money. But what I want to point out is look how quickly he got that return. Because what did it do to this crypto market? Bitcoin being one of them. It added legitimacy. It seems like a credible investment. It means that we're seeing other institutions putting investments into this marketplace. So their expectations, again, if you think about that kind of money, are they looking for a return tomorrow? Are they looking for a return next week? Typically not. They're looking for a return maybe in 6 months. So you want to keep in mind the money that's flowing into this market. What is their expectation? What is their staying power? And some of the funds that are putting money in here have staying power. So to see volatility should be expected. For us to go back above 50,000, I don't think that's out of the question. And once that happens, it's going to trigger that again, people feeling the anxiety of missing the trade. So that's going to draw money into it. It's going to create a feeling that, oh my gosh, this is real. But at the same time, we want to think about Janet Yellen. So it's the difference between expectations of the market and the reality of the market. And I think Janet Yellen, the points that she raised, is this the most efficient way to make a transaction? There are some attractive things, but there's also some things I think on the negative side. So it's that combination of both.
Great.
It's the efficiency of the market.
Great. Thank you so much. Dan Gramza, President, Gramza Capital Management. Thank you for joining us and have a great day ahead.
Thank you. You too. Take care.